Now it's time to kick off the day with the keynote Building Business Champions. And I would like to welcome to the scene Ville Koskenvuo, partner at Vaaka Partners. And then we also will have Bernardo Krüger, private equity and venture capital practice at Oracle NetSuite. Unfortunately, he's not able to join live here today, but he will be via stream. So let's see if we have some technical questions here, but otherwise I would like to welcome Ville to the scene. Otherwise this is also working.
Check, yeah.
Check. It works. Ville, welcome to the scene.
Thanks, Robin. Yeah. So hello everyone, good to see so many faces, and I guess some people on the line as well. So my name is Ville Koskenvuo, and today I'll tell you a little bit in the beginning about my background. Then my co-speaker Bernardo will tell a little bit about his background and NetSuite. And then I'll tell you a little bit how we at Vaaka Partners approach and think about building business champions. And then we'll have a bit of a Q&A around that from Bernardo and also from the audience. So my background is that I first started in banking, and I guess what bankers do is that they help growth companies to finance, to do deals and divestments, which might create better companies, but they're not really the business builders. They are helping the people who are building businesses, but more of a transactional basis. Then I moved on to private equity, a company called EQT, publicly listed now in Sweden, quite global. Worked there with growth companies in the US, Sweden, Poland, and across Europe. Then I had a little bit of a entrepreneur stint on the side. So I did move from EQT to Vaaka Partners, where I'm today a partner. But I also was helping as a founding investor and chairman with one Finnish growth company called Blueprint Genetics, which went from 0 to north of 20 million euros of revenue, very global, half of that from the North America. And that was sold sort of year and a half ago to Quest Diagnostics, world largest diagnostics company. Very successful growth journey. And now at Vaaka Partners, which is a Finnish private equity firm, we're helping Finnish growth companies to fulfill their visions. I'm now on the boards of 4 of our companies: Framery, Lyyti, Staria, and Jungle Juice Bar. And I just put there one-liner there about what kind of drives me. And that's that I'm really passionate about driving growth. And I think, like Artti said it, you don't do it alone, you do it together. So it's great to be able to find and build great management teams and find industrial advisors, people with long seasoned careers in those industries to help them via board work. So that's what I do for work, and I just love it. But then I'll hand it to Bernardo on the line.
Hi, Ville. Good morning, everyone. I hope you can hear me well.
Yeah, we can hear you well.
Super. So yeah, definitely, sadly, due to travel restrictions, I could not join you physically, but I hope we can still make this session entertaining and informative nevertheless. So a little bit of background on myself. I'm Italian and German, but I live in Paris for over 7 years now. My background, a bit like in your case, it's in finance and M&A, and I joined Oracle NetSuite about 3 years ago to develop the private equity and venture capital practice here in the EMEA region. So as you see on the slide, our practice is a dedicated point of contact for both private equity and venture capital firms. We partner with them to support their value creation efforts, of course, with a focus on the digital side. and we are here essentially to ensure satisfaction with NetSuite across their portfolios. So I wanted to share with you, if we can go over to the next slide, a few figures about NetSuite. I'm sure you will see at least some of those again throughout the day, but nevertheless, I have the let's say the luck to be the first one presenting them. So the first one is 27,000, which is the number of NetSuite customers worldwide as of the last quarter. And watch out for a new figure because it's going to be released soon about the current quarter. Of those, 6,000 have been added over the last 12 months. The second figure is 5.5 thousand, which is the number of NetSuite customers that are backed by either a private equity or a venture capital firm. And so this shows both the great fit that NetSuite has with fast-growing and internationalizing companies, and also the strategic importance that the referral among companies that are part of the same portfolio has had and still has to our success. Third figure is 182, which is the number of NetSuite customers that have become a public company in 2021 until now, until again, I think it was the end of October. And this included 119 IPOs and 62 SPAC mergers. Finally, the fourth number I wanted to share is 42%, which is the percentage of companies that became unicorns in 2021 and that are using NetSuite. So we're glad, as you heard before, to have some of these joining the event today, like Wolt, Vinted, and Rolik. Now I wanted to provide a bit more color on specifically on the IPO and the NetSuite fit about the IPO. So obviously 2021 was overall globally a huge year for IPOs, thanks also to the SPAC phenomenon that I mentioned before. So as companies listing on the stock exchanges are getting younger, they often don't have a financial system in place that allows them to be compliant with, as we know, there is a stricter regulation once you move and become a public company. So we've seen a lot of them that turning to NetSuite to cover this aspect and also ensure compliance and sort of build the foundation for their future growth. So beside the overall number, which I mentioned already, 182, and that is for sure poised to reach 200 by the end of the year. What's impressive is definitely the proportion of technology companies that became public and that are using NetSuite. So 52 out of the 85 tech companies that went public in 2021 so far are NetSuite customer. So that is almost 2/3. And you got here, I think, yeah, absolutely on the slide, a few logos. I'm sure you're familiar with at least some of those. Next slide, you have here a few logos of companies that are using NetSuite and that are also supported by either a private equity or a venture capital firm. So what we typically see is that investors, and of course Ville will dig deeper into this aspect, definitely encourage their portfolio companies to accelerate growth. And for that, obviously, there is a need to have a very good visibility into the business, but also ability to enter a new market and also integrate other companies that are being acquired through an M&A operation. So with that, I'll give it back to you, and Ville.
Thanks, Bernardo. So always, obviously, it starts with marketing, but I guess this gives a little bit of background about Vaaka Partners before I tell you a little bit how we think about the concept of building business champions. So we are a private equity firm, and what we do is that we focus on growth strategy buyouts. So these are already profitable companies that are in the scale-up phase, and this is a good to understand versus the kind of venture-backed companies, which are typically what they need is funding, and they're typically in the growth mode. They're unprofitable, but that's kind of the stage where kind of Vaaka Partners comes in. We focus on companies which have revenues from 10 to 200 million euros, And all of these need to have a strong strategic position in their own segment markets. We're a small firm, just 19 professionals, but we're a very active owner, and that means the work that we do through the board of directors and jointly sparring the CEOs. But altogether, the Vaaka family companies, where we are the majority owner, we currently have 13 companies, which altogether have a bit short of 600 million euro revenues and 4,000 people working for those. And different companies kind of need different toolbox or different value creation strategies. So for some, it's internationalization, not for all of them. And for some, it's buy and build strategies where you acquire a lot of competitors, and you integrate them into one larger and a better company. But it really depends on what's right for each individual growth company. Here's some of the investment themes that we have at Vaaka. So the kind of fundamental criteria is like I said, those companies need to have a strong strategic position in the kind of their core or segmented target markets. They need to have a significant growth potential, and it needs to have a manageable risk level. And when I talk about that, is in kind of private equity, you shouldn't lose money on any of your investments. And typically, you don't lose money. Maybe in 5% of your investments, you lose money. And that's a big contrast to VC that Bernardo talked about, where it's a little bit the other way around, that very few of those companies really make it. And we just kind of categorized some of the Vaaka businesses in 3 different buckets. The first one being a scale-up of B2B services. There's blue-collar services and white-collar services and tech-enabled services and SaaS businesses. Then the second one is internationalization of B2B products. And then the third one is rolling out winning consumer concepts. Some of these companies we are still the owner, and some of these companies have already passed on from us to the next stage. One example being Musti ja Mirri. So this was more than 10 years ago when Vaaka became the owner. The company had revenues of 20 million euros. Today it's publicly listed in Helsinki Stock Exchange with revenues of about 300 million euros. So it's like 15x growth in a bit more than 10 years. Then about the Vaaka way of working. So I'll go into detail, but we call it kind of the first one, the Vaaka Champion Platform. And that includes fundamental private equity toolbox, and it includes some of the spearhead areas where we build competencies. And then secondly, going back to the people, you can have all the right tools, but if you don't have the right people and the right culture and values, none of that matters. But what we have been doing is that we've had excellent results. If you look at the companies altogether, we've been able to more than triple. Just some facts about kind of the activity level. Not all of those companies have a M&A or buy and build strategy, but some are. And altogether for those companies in the past 10 years, we've made more than 100 acquisitions. So some companies have made 10 acquisitions, like Physios, building the largest physiotherapy chain in Finland by consolidating a lot of small businesses in one umbrella, which had the capacity to become the quality leader and also invest on all those digital concepts. And then about the Vaaka Champion Platform, and I think the left side, the fundamental toolbox is kind of fundamental things. So the first being the governance model means that, and this is, I would say, quite typical for private equity firms, is that we don't interfere with the business. So the CEO runs the business, and our activities are mainly through the board of directors. Obviously, we do offer the management teams a good incentive program. Same things for the boards. It's very important that we do have aligned interest on the value creation, and that kind of cuts out the politics and ensures that everyone has an eye on the long-term goals. Then the third one is the industry advisor network. So these are seasoned people with different industries, old CEOs, CMOs, etc., that are currently typically in the late stage of their careers and now focusing on board work. And that's the group of people where we are recruiting our board members. And then the last one was, I said, we have a specific playbook for doing buy and build strategies. And then we have a few spearhead areas where we built our competencies over the years. It's sort of how companies approach doing and conceptualizing their strategy and business plan. It's kind of the performance management, which goes very much in terms of how the sort of CFO offices are being built as the companies are scaling for the next level. We have sustainability as one of our spearhead strategies, some sustainability champions, and things that all Vaaka family companies need to do to be ready for sustainability 2.0. And then digitalization and people and culture are also areas where we have specific competencies. And then the second part is kind of the culture and values, and these are very important. We have kind of like three main values, being integrity, growth, and collaboration. And these are promises that we at Vaaka make to ourselves, promises that we make to the stakeholders, so to the management teams, to the employees of our companies, and to our investors. And just maybe few takeaways here is that from integrity perspective, it's really having the long-term vision. It's not about playing the next quarter. It's not about playing this budget year, but it's looking at 5 years out. What can we achieve in the next 5 years? And what's the outlook for the next 5 years? So it's like a 10-year thinking. And this ensures that you're making those decisions that create value in the long run, not the ones that are maximizing profit for the next year. Then on the growth side, I think very much easy to share what Artti said about growth. And we strive to grow our companies. We strive to go Vaaka as a firm, but this comes through individual growth of the people that we have at Vaaka and the people that we work with. And I always say, and it's part of our values, is that everyone makes mistakes. I make mistakes every day, and it's just important that we learn from those mistakes. And you have the transparency of saying that, yeah, I'm sorry, I screwed that one up. And that kind of develops a lot of psychological trust when people are not afraid of saying that. And then you can put all the problems on the table and jointly try to work around them. And nobody's kind of trying to hide anything and trying to work alone on problems that might be very problematic to solve alone. But yeah, I think with that introductions, Bernardo, let's jump to the Q&A.
Yeah, absolutely. So we thought there are a few topics that we definitely want to be digging deeper into, because we thought they could be of particular interest for today's attendees. So the first one is about how you, Ville, and more in general Vaaka, select a target company, and also which specific toolbox you apply in terms of implementing the value creation. You mentioned before that in some cases internationalization, but not always. So if you could share a bit more about the parameters that you look at, both in the pre-deal phase and once you've invested to really define the value creation plan.
Thanks, Bernardo. Yeah. So for us, like I showed in the beginning, the size is one of the criterias. So we don't get involved in stages where there's like a few guys and an idea. That's not kind of the DNA of Vaaka. There's a lot of venture and startup venture companies are at that stage of the life cycle. But for us, kind of the company needs to have a meaningful size in the beginning, and we are kind of in that growth phase. So looking at the amount of employees and revenues is one of the kind of criteria that we are looking. And then the second one is really the growth. And how sustainable that growth is. And that goes all the way to the business model of what kind of business model they have. Do they have a good strategic position? And is that sustainable? And what is the growth rate that company has today? And what it could achieve in the next 5 years if it would get more resources and maybe a bit more gutsy owner. But those are kind of the main things. Obviously, like I said about the risk level and how sustainable that growth is, it's also a very important area in that equation. And kind of selecting a target company, that's pretty hard work. If you think about Vaaka partners, we are a big sales machine. We are not waiting for those companies to call us. We are proactively going after all those companies, meeting management teams. We have at the moment probably like 200 discussions, relationships ongoing, and discussing with different owners and management teams about what are the areas they could benefit, or the companies could benefit from a partner like us. So these are typically not the very transactional things, that these are relationships that are kind of nurtured over many years of time. And at some point of time, then the founders and the management teams can realize that, hey, I think the idea that we have been now discussing for a long period of time, we should actually do this. Let's go out and do X. Let's go out and buy our competitor somewhere else. So those kind of things are what we think about when we think about target company. But it's a marriage of two. So it's not just that we select someone. It's like recruiting. They also need to select you. They need to be convinced that we would be a good partner. And it's not just about that they believe that we can help them to grow, but they also do need to believe that will be fun. Because many of these founders are at that stage in their life that they don't have to do anything. They want to drive growth, but they also want that journey to be worth living.
Great. So thanks for sharing that, Ville. The next topic, you are surely not going to avoid this one today, is the role that the ERP system plays. And so I wanted to ask, how often do Vaaka consider that a portfolio company's business visibility is not enough to allow you to track their performance and monitor the implementation of the value creation plan?
I would say that in the beginning, almost always. It's kind of those companies are at the stage where they've grown really fast. They haven't had really the time to put the systems together, and they realize that for the next phase in their growth, they can't just be multiplying the same thing they did past 5 years, 5 times over when the scale goes up. So they need to have a new system. And some of the, some of the Vaaka companies, they have NetSuite, and like obviously Staria, you need to eat your own drugs. Framery as well, already for quite some time. But the ERP it's quite crucial. We've gotten that right many times. Sometimes we didn't get it right, and hopefully we've learned something from those mistakes. But ERP is kind of the crucial thing that when we're looking at what do we need to develop for those companies in the next 5 years, quite often that's one of the crucial parts. That if you want to do performance management, want to have a better visibility about your customer and product profitability, it's very difficult if the business grows and that thing lives in Excel. So quite often we do have to do an ERP project, and obviously for many of our companies, NetSuite is an important part. But that really starts from the ERP and what does it enable, and how this whole BI is built on top of that, so that you can get the same information from multiple different systems into the kind of what you would call like management cockpit. So it's not just financial data, but all the other data that is relevant KPIs.
Super. Next topic is M&A. So the question here is, how do you ensure that an M&A achieves the expected outcomes? Considering that the statistic, I think it's overall known, less than 50% of M&A are actually actually more than 50% of M&As are failing. So especially when you have a very acquisitive strategy for a portfolio company, right, as you mentioned before, buy and build approach. So how do you ensure that the M&A is completed successfully?
Yeah, it's a good question. How do you ensure? I think it's a I would say we're a bit more cautious than we've done 100 deals, past 10 years or so, add-on deals. But I would say we're a bit more cautious about M&A, just recognizing that fact. And it means that you really need to have a clear playbook how that M&A creates value, rather than just adding size. Because if the story is just kind of adding size, the cultures might not match. You could leave talent. You could have all kinds of integration issues, which will lead that deal will not yield what it should be. So some of the examples is like what I explained. It was Fysios. We saw that in Finland, in the healthcare system, there's a lot of small, 1-2 million euro revenue physiotherapy companies run by entrepreneurs, and these entrepreneurs are doing all these things. They are doing the marketing, they're doing the accounting work themselves, invoicing, taxes, all that fun stuff. But physiotherapists, when they think about the patients and how can they help them, that was not really their focus. And obviously, there comes the ERPs. It's slightly different in that area where you have these electronic health record systems like hospital or healthcare ERP systems. And they obviously didn't have the resources to invest in digitalization and the whole digital journey, and enable to kind of have quality records for example, insurance companies. So we saw them having that problem, and our kind of idea was that what we would like to do is have a lot of those things provided centrally, like shared service center, and just one part that is doing all those digitalization investments, which means that the individual people, the physiotherapists, they can focus on the actual patient work. If they cut all of that admin work, they can actually take one more patient each day, or even 2 more patients each day, and that created a lot of value. And it was a good value proposition when kind of the management team was running around Finland and talking with a lot of these founders that this is what we are about to do and you want to join. And quite a few of them wanted to join. And we started the company from zero, and now it has more than 50 million euros of revenue, and we just sold it this year to Mehiläinen, the largest healthcare company in Finland. But there we had a very clear plan of how that M&A actually creates value at the grassroots level. Very similar story with a company called Kotikatu, sort of a similar type of value creation story. But then there's different types of stories where it's not an add-on growth. It's more of a putting 2 quite similar or large companies together, and there it's more tricky to see that which is the merger of equals. I guess many have heard that story. Few of them have really ended up well. Typically, it's important that there's some size difference between those companies, and sort of a shared agenda in the belief that this creates something good, rather than just, you know, that the bankers said that this M&A makes sense and it's bigger company, so it's better. It's not always like that. But my answer for that is that it's very difficult to ensure. But the good first starting point is the understanding that how does it create value at the grassroots level, and if you can understand that well, then there's a good possibilities that the M&A creates value.
Super. So another topic I'm sure the participants are curious about is exit strategy. When do you start preparing an exit, and how important is it for the final valuations, for the offers that you get from the different bidders, that so the potential buyers can get a clear picture of the company that they're looking at?
Yeah, so kind of the maybe the naive belief is that kind of first you start with a good company, you build it to a great company, and at some point in time there's so many people knocking at your door that it's difficult to keep it closed. And then I kind of that point we say, okay, we're ready for it. So naively thinking that when you do build a great company, that will create a lot of interest from the relevant buyers. Obviously, before we buy companies, we are looking at the industries and thinking about that, hey, if we do these things and we're successful in achieving this business plan, what kind of company we have then, and what could be interested for that? Who would strategically think about that this is interesting for us? Obviously, we've done a lot of exits to strategic buyers. We've done some exits to other private equity companies. And obviously then the third one is the IPO. And that kind of balancing between these three different options of selling to a strategic buyer, selling to another private equity buyer who might continue the same kind of growth journey, or an IPO. It really depends of where we can both maximize the value but also find a good home for the company. So it really depends on a company by company basis that what is the right decision. And obviously one important thing is also to understand that what do the other shareholders and management teams want to do. If kind of things are pretty even Steven, then we'll have to think about that what they also want to do. But that's the kind of a saying is that when you have things in order, you build them over the, let's call the 5 years time. It can be 3 years, it can be 10 years. Once you've done those things, then it's a great company and it's ready for exit.
Super. Final topic I had for you. Are there any specific actions undertaken by Vaaka to facilitate sharing of best practices and in general on knowledge among the different portfolio companies?
Yeah, so like I said, we had those spearhead areas, and at Vaaka, where we have documented concepts that we can share with those companies. But I think it's more important of combining that with some of the people that we have. So we have one person who's kind of a Vaaka's digitalization expert, one person who's expert in kind of helping management teams of crystallizing strategy and doing strategic plans. But more importantly, we have what we call CXO forums. So we have a forum from all the chairmen of Vaaka companies where they regularly meet up and kind of more of a peer-to-peer discussions than sort of advice coming from Vaaka. We have a similar forum for all the CEOs where they meet 2-3 times a year, discuss topical issues. We have a similar forum for the CFOs, where we obviously, Bernardo, we have had NetSuite on the agenda as well. And some companies obviously will be going for that. And then we have a forum for the kind of sort of head of HR or head of people and culture, where they can do like peer-to-peer discussions and find best practices. So not always it is sort of something that, or actually quite often we don't think it should be Vaaka or someone from Vaaka doing that, but it can be something that we can facilitate, and where kind of the CMOs and those can discuss peer-to-peer.
Great, super. I think we can open it up for a Q&A from the audience.
Does someone have a mic? Yeah, Robin, you have a mic.
I think we could start off with some questions that have dropped in via the chat, actually, during the discussion and the keynote. And the first question is for you, Bernardo. What do you think is the biggest reason why IPO companies choose NetSuite, or maybe companies that are planning for an IPO choose NetSuite?
Yeah, I think it develops on the number, I think, right? I mean, it's really been in the last 2 years, so many companies doing an IPO on NetSuite. I think that helps for sure. So the brand of being the solution that really helps companies. But overall, I would say that it was a general fit from the inception, because really NetSuite, if you go back 24 years, I think, to the creation, it was really created for fast-growing companies, but specifically for SMEs and I would say startups. So it's really exactly from the inception that NetSuite has been really built for this. And the good thing about NetSuite, I think, is also the fact that, yes, it is a solution for small and medium-sized companies, but then once they become super big, they have actually no need to change over to another solution. So I think that's also a key strength for us. The fact that the customers know that once they're NetSuite, they can become, you know, a 10 billion company, and they're still going to be using NetSuite. So I think that's, of course, good to know, because you don't want to be changing too many ERPs in your lifetime.
All right, thank you, Bernardo. Then we got another question, and I guess that's for you, Ville. What has been the biggest success factor for Vaaka companies?
Very difficult question to try to pinpoint it down to that. I think my view is it goes down to the we have a very systematic way of doing, no surprise, private equity, but it's a combination of that with our way of collaboration, of finding the right talent for helping those management teams of thinking about what's the strategy for the next 5 years, and how can those people help the management teams via the board work of achieving that strategy. I think that's kind of being very systematic and having the right people collaborate in a meaningful way. I think that's where things have worked very well for us. So.
All right. Do we have any other live questions? I can run with the microphone.
Or we should let the unicorns on the stage.
Yeah, I think we should. I still have one question, and that's actually also for you, Ville. I think it's not about which company, but could you tell us? You mentioned, for example, Musti and Miri and their journey. Can you tell us briefly about any of the other success stories you have experienced from Vaaka?
Yeah, lots. Difficult to then choose which one would I say, but yeah, if I would take one of our companies that we did exit. So it's not just on the paper, but it's actual realized success story, and that is sort of company called Kotikatu. And they do real estate maintenance services, and company focused on Finland. Same thing about seeing an industry unconsolidated, where we saw that building a kind of critical mass in certain cities will create a lot of efficiencies. So this means having, again, on this case, the kind of M&A playbook, so doing a lot of small add-on acquisitions. But they had a slightly different business model than kind of the other companies in that area, where their kind of the customers are the building associations, so in Finnish asunto-osakeyhtiöt, and this is mainly block houses in big cities. And when obviously they need services for cleaning the houses and taking the snow out in the winter and raking the leaves and all of those things that people don't do themselves. And this is what people typically did. And we also provided that service, but we also provided all the other services, what they needed more on an ad hoc basis, where something small is broken. So when they are in those premises every day cleaning, they can see that there's a light is broken or door is broken or something is broken. They kind of tell the representatives of the housing building associations that, hey, this thing is a problem. Do you want us to fix it or not? It's bringing all those services in Finland of dropping snow from the roofs and those things. So when things come up, they have always that capacity to do all those ancillary services. So when they bought a new business, they obviously took that typical kind of cleaning and maintenance service, but they added all these other services what they provided for those companies. And I can tell you that if you have one building as your customer versus if you have in the same area like 15 buildings, it's so much more efficient to do that service. So there we did the same kind of playbook of explaining that what's the value creation. And for most of those companies that we bought, we were able to increase a lot of the revenues and double the margins. And we did that growth journey for 6 years, and the results were very good. And that company has now acquired another large company in Finland after our exit, and also expanded to Sweden to start the same journey there. But a lot of loved ones, and a lot of those also now still being Vaaka companies. Obviously, Staria being one of them.
All right. I guess if we don't have any more questions, I just think that we should thank you, Ville. Thank you, Bernardo. Let's give them a big applause.